Hey everyone, recently I have received multiple requests to cover why Sona BLW share is falling. In fact, this is one of the most requested video. There are many more comments which I could not include here. So Sona BLW is one company that was in my radar since the day one of its IPO. In case if you are not aware, let me just throw some light on Sona BLW's stock journey since its IPO last year. Sona BLW, also known as Sona Comstar, launched its IPO last year in June 21 at a price band of 290 rupee. And the IPO received a very cold response. It was subscribed 2.3 times and got listed at 302 rupee. However, in the next few months, Sona BLW shares saw a dream rally and the share touched a high of 829 rupee in December 21, generating nearly 3 times return in 6 months. Although since its December high, Sona Comstar has fallen nearly 43% to current levels of 470. Now the question is, why Sona BLW saw a sharp correction? Is there any change in company's fundamentals? And if you are an existing investor, then what should you do? Sell, hold, or accumulate the stock? And if you are a new investor, then is it the right time to invest in Sona Comstar at current level? So in this video, I'll try to answer all these questions. But before that, this video is only for educational purpose. At the end of the day, you should do your own research before investing your money. Alright, let's get started. So I have identified 3 major reasons for fall in Sona BLW share price. First reason is expensive valuation. Sona BLW has always traded at expensive valuation as compared to its peers. In fact, at the time of IPO itself, it commanded a PE ratio of 78. Hence, Sona BLW always commanded rich valuation from day one. That was probably the big reason why this IPO issue did not receive a huge response. However, as Sona BLW share price jumped from IPO price of 291 to highs of 829, its valuation kept on rising till December 21. In fact, at its peak, company was trading at a P ratio of 199.8. That was insane valuation. Certainly not sustainable. This sharp jump in share price was mainly due to 2 reasons. A, company was posting stellar quarterly numbers. Company's profits jumped from 251 crore in FY21 due to COVID to 362 crore. And B, last year witnessed a huge bull market with crazy liquidity. So investors were buying growth stocks at any valuation. Hence Sona BLW valuation jumped to crazy level that was not justified. Hence the share price fell down to current P ratio of 76. Now even at current levels, this valuation is looking expensive. But the question is, why does Sona BLW command such high expensive valuation? We will discuss it in the later part of this video. Now second reason for fall in share price is slowdown in US and Europe. In FY22, Sona BLW generated 55% revenue from US and Europe. And we all know that both US and Europe are struggling due to slowdown. There's a sharp fall in demand for automobiles in Europe. US demand has been flattish and this has impacted the earning growth of Sona BLW. Moreover, the sharp jump in the raw material and gas prices last year has impacted company's operating margin. As a result, company's earning that grew from 72 crore in H1 of FY21 to 170 crore in H1 of FY22 has remained flattish to 169 crore in H1 of FY23. And since the slowdown in US and Europe is expected to remain for FY23, market is expecting more negative impact on Sona BLW earnings. So due to expensive valuation and lower earning growth, Sona BLW has seen profit booking as it generated nearly 3 times return for its investors from IPO price within 6 months. Then third big reason is promoters selling the stake. In August 22, Sona BLW promoter Blackstone has sold its 13.6% stake from the company for 4,000 crore rupees. And this was with an open market transaction. Blackstone held 34.12% stake in the company that has been reduced to 20.52%. So if I summarize, the biggest reason for fall in share price for Sona BLW is ultra high valuation due to crazy jump last year bull run. And now, since company is facing challenges in global market and there is liquidity crunch, investors have booked profit after generating good return on company post IPO. So fundamentally, there is no problem with the company. It is just a profit booking activity due to external reasons that are not in the control of company. Now, even at current levels, company is trading at a P ratio of 76, which is very high. And before you take a call of buy, sell or hold, you should understand why company commands a high PE. And for that, you need to understand company's business and future roadmap. But before we proceed, we have a partner for this video. It's M Stock from Mira Asset. M Stock is a trading platform that is disrupting the traditional brokerage sector with its zero brokerage model. All you need to do is pay a one-time fee of $999 and you can make unlimited trade without any brokerage. It includes free intraday trading, free delivery, free F&O trades, basically everything free for just one-time fee of $999. And if you open a Demat account with Mstock, you just need to pay a one-time amount of $999 and your Demat maintenance would be free for life. So basically you pay a total of $1998 and all your trading is free and your Demat maintenance is free for life. And since Mstock is a part of Global Mirai Asset Group, it brings 25 years of legacy and experience of 15 countries. Mstock platform is built on advanced technology that can process thousands of orders per second and provides you with stable platform and a seamless experience. This is a great option for those who trade frequently and even for investors who are looking for an alternative low-cost trading account. Mstock has also launched margin trading facility at an interest rate of 7.99% to 9.49%, which is one of the lowest rate in the industry. So if you want to explore Mstock, I have provided the link in the description box. Incorporated in 1995, Sona Comstar is one of the leading automotive technology companies in India. The company is primarily engaged in designing, manufacturing and supplying high-quality mission-critical automotive components such as differential assemblies, gears, conventional and micro-hybrid starter motors, etc. These products find usage in passenger vehicle like belt starter generator, starter motor, reverse idler, etc. Then in off-highway vehicles like differential assembly, differential bevel gears, starter motors. Next in commercial vehicles like inter-axle gear seat, coupling, starter motor, etc. Then its product find usage in electric cars like traction motor, controller, differential bevel gears, spool gears, etc. Then in electric two-wheeler and electric three-wheelers. If you look at the revenue breakup in FY22, passenger vehicle contributed 68%, commercial vehicle contributed 16%, off-highway vehicle contributed 15%, and remaining 1.5% from two-wheeler and three-wheeler. Company supplies its products across world including India, US, Europe and China. It has 9 manufacturing and assembly facilities across US, India, China and Mexico. But still, how does all this justify a premium valuation for Sona BLW? The answer lies in the leadership in the segment and future roadmap. As per CRISIL report, Sona Comstar is an undisputed leader in its segment in India with 55 to 60% market share in passenger vehicle, 80 to 90% market share in commercial vehicle and 75 to 80% share in tractors. It means majority of cars, commercial vehicle and tractors out there uses Sona Comstar product, and that's a huge market. In fact, company is also a leading manufacturer with 6.3% global market share in differential gears in 2021 and 4.6% global market share of starter motors. Company's client list include 7 out of world's top 10 passenger vehicle OEMs, 3 out of top 10 commercial vehicle OEMs, and 7 out of top 8 tractor OEMs. So the first reason for premium valuation of the company is leadership. Then second reason is its future roadmap. Over the last few years, Sona BLW is consistently increasing its focus on future mobility, which is electric vehicle. Just to give you an idea, in FY20, company had 27% revenue from traditional petrol and diesel vehicle. It got reduced to 25% next year, then 18% by FY22 and latest it is 17% in H1. And the battery electric vehicle contribution in company's business has jumped from 2% in FY20 to 14% and then 25% in FY22. In total, as per H1 of FY23 data, 25% revenue is from battery electric vehicle, 21% from hybrid vehicle, 37% from power source neutral and 17% from ICE. So clearly company is leading the electric vehicle market, which is the future. And this contribution from electric vehicle is expected to grow to 50 to 55% in next 4 to 5 years. So there is crazy growth ahead in EV segment for this company. And interestingly, company's CEO mentioned that earning from EV vehicle is nearly 3 to 4 times higher than traditional vehicle. So that would result in higher margins for the company. And it is continuously adding new products in the market and in the technology roadmap. For example, it has couple of legacy products in the black segment like starter motor, then current product in blue segment include low voltage inverter, belt driven starter, mid-mount driver motor, etc. And look at the future products in the white segment. And within that, majority of products are for electric segment. In fact, it is the consistent introduction of the new products that has resulted in a very impressive Q2 result for the company in spite of such difficult times for global auto sector. We'll look at the financials shortly. Now the most important part, which is the order book. Do you know what is the order book of the company? Currently their net order book is 20,500 crore rupees for the next 10 years. That translates to 9.6 time order book as compared to FY22 revenue. Out of this, 68% order book is for electric vehicle. Crazy, isn't it? No wonder company would continue to command premium valuation. Financially, company is growing on a consistent basis and its revenues have jumped from 612 crore in FY18 to 699, 1038, 1566, 2131 and latest 2291 in trailing 12 months. Company's profits have jumped from 78 crore in FY18 to 173 crore, 360 crore, then fell down to 215 crore during COVID, then again jumped to 362 crore and latest at 359 crore. Company is highly profitable with both ROE and ROC about 20% and it has a debt to equity of just 0.12 which is negligible. Company has recently posted its Q2 result and its revenues have jumped 12% year on year and profits are up 5.6% and that too in a very difficult economic environment, which is a commendable job. Currently, Sona BLW commands a market cap of 27,000 crore rupees. So it is a mid-cap company. Now the final question is, should you buy, sell or hold this company? Well, if you are an existing investor, then you can utilize this fall as an opportunity to add Sona BLW in a systematic manner. And if you don't have money to buy more, then don't make the mistake to sell it. By the way, this advice is only for long-term investor with horizon of 5+ years, not for traders. And if you are a new investor, you can certainly consider making a fresh entry in this stock and buy it in a systematic manner. Yes, the valuations are still expensive and there are still concern over demand from US and Europe that constitute 60% of company's revenue in H1 of FY23. So there is still a risk of slowdown in the near term which might negatively impact company's performance and share price in the near term. But Sona Comstar is one of the leading player in EV segment, which is the future of mobility in 21st century. So long-term growth prospects are immense. In fact, Sona BLW is one stock where both FIs and DIs have significantly increased their stake in this fall. FI shareholding has increased from 8.8% in June to 11.56% in September and DI's holding has increased from 16.12% to 24.52% in September. That shows the confidence of both foreign and domestic institutional investors in the company. Hence, this current fall has created a good opportunity to accumulate Sona BLW in a systematic manner. Although I would again repeat that in the near term there could be more pressure due to slowdown in US and Europe, but for long-term investors, this is a good opportunity to accumulate this stock in a systematic manner. So this is it for this video. If you find it useful, then do press the like button and subscribe to this channel for more interesting content. And if you want me to cover any specific topic, do let me know in the comments. I'll see you next video. Till then, take care.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.